The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. And it's my pleasure to be here 11 o'clock till noon Eastern Time, Monday through Friday on market days. So when I'm looking at this market, I'm saying to myself, the Dow is barely taken off to the downside in percentage terms. The same day, Friday, that the market made its high, that weekend, by the end of the day and that weekend, there was an incredible amount of bearish talk. But we've got to isolate. You've got to sort out and look at the various components. Yes, 20% down, approximately 20% down in the IBB, which we had targeted a long time ago, has been extremely toppy and managed to still be holding short from the very top. That's a sector. Within that component, you would have to put in the momentum stocks. Well, some of them came down. They've not even had a move to the downside like this in months, but in some cases it's years. There are other stocks that I made a big deal about it, and I'm going to make a big deal about it again. Why would Alcoa, why would USX, why would some of these heavy cyclical stocks be doing pretty well at this particular point? And the only answer I can come, why are the insurance stocks holding up so well? Why, in fact, is Berkshire Hathaway, let me just put this up. Look at this chart, Berkshire Hathaway. We looked at it in my Master Trader series on Saturday. Why is that just going sideways? So please, be market and sector specific. If you are shorting, absolutely there are sectors that are still highly vulnerable, still very overbought. Within that context, you've got to be looking at something else. And one of the things I wanted to mention, I'm not sure if any of my master traders from Saturday are actually listening at all. I hope they are. I'm going to be sending out some follow-through material that we had so much to go through that I never really got to. I'll send it out, and then I will also be sending it off to my subscribers to my opening call, because it is important at this particular time to be identifying what really is weak, what you think might be weak, but it hasn't turned down yet, why certain sectors and certain stocks continue even today when there's such a tremendous, well, let me just quickly say, in a bear phase, rallies fade very quickly. And just like we saw on the up moves, where any pullback, by the end of the day, by the end of the week, by the end of the month, you made higher highs. So now we're looking at this rotational aspect, and the rotational aspect says you can play counter-trend rallies if you understand that they are just quick counter-trend rallies. If the tide, those monthly tides, are turning down, they will wash away any strength that you see in the daily or the weekly very quickly. But if there is still strength in those monthly charts, then you will see stocks that you choose to go long, they should do very well, and they should do very well right in this particular time frame. Why? Because in a rotational market, which there still is, even though there's a plethora, a kind of a weighting more towards the bearish side in many of the sectors, there are enough stocks here that say we aren't just ready yet to go down. We might not actually rally all that much, but we're not going down. And if you're looking at the stork leg formation, it looks more like one of those medieval horses they had the material, the little blanket or whatever it was on the sides here in this middle one. This is Berkshire, doing very nicely. That's not to say that we aren't making some kind of a consolidation, but you've got to admit it. That's impressive action. All right, so thank you, Steve, for 2 great hours, always kicking us off here at TFNN. We have programming all the way through the day, and just stay tuned. You got Larry Pesavento coming up next. You got Daryl Martin. You got Dave White. Tom O'Brien, of course, wraps it up in the afternoon. I always forget on a Wednesday to mention this fabulous show at 7 o'clock, and it's on. It's a mind. It's really, especially since I am now going back to doing some yoga, you get to appreciate how important the actions that you produce through your thinking become in your daily life. And, talking about daily life, we have started here at TFNN. We've got another one of those Tiger Dollar promotions. And for 5 consecutive, I believe it's consecutive days, but for 5 days, Tom O'Brien's going to give you the setup that he uses. This is free to those who sign up for Tiger Dollars. So besides a 20 to 25% bargain you get there, you're also going to get Tom for five trading sessions, talking about how he's setting up, what he's looking at, why he's looking at it, what he's going to do, what his plan is. The plan of action will be yours for the education and for the taking. Great. I've seen Tom do this a number of times. When we used to have the show down in Florida, he would give a demonstration, live demonstration on trading. So that is something that that's really nice to see. And I see that Bud is here in the den visiting us. I believe he has tonight. Yep, tonight. Well, let me just say it's called Mindful Living with Ali Ford, and that's a great show. So 7 o'clock Eastern time. So I see Bud is in, and I believe Bud is doing one of his very rare, very special webinars this coming Saturday. Just check it out. Bud taught us a lot about how to deal with channels, how to look for specific points of reference to your left side, most hit trend lines, Saturday at 9 o'clock till 10:30. So please check it out, and hope you're doing well, Bud. It's great to see you here again. And so now let's go to our market. The market is very interesting because the Dow was a little bit weak, then it went stronger, then it weakened. Now it's kind of in that middle of the range, up 27 at 16,283. See what happens when you go into a sell signal to a sell mode, at least in my work, that's in the daily chart of the Dow. Even though we haven't gone down all that much, that's what the MACD and stochastic are saying. It means that any rally at this particular point must be considered a counter-trend rally until we take out the old highs. So in this particular instance, what you're looking at, and actually you can see it even more when you're looking at the IWM, the Russell 2000, is that rallies are very meager. They just don't garner the kind of strength that they did when you were in a buy mode in the daily, weekly, monthly charts. And right now, the daily and the weekly are in sell mode in the IWM. It's at 113.80, up 19 cents. So let me go back to the Dow, and we'll run them in order. INDU. The Dow also had a nice rally up to the, let me see if I've got, up to the 16,331 level. For my subscribers on my opening call, every day they get this Dow chart, and I explain what we're looking at. So we've got a down arrow. We are, in fact, short the Dow from Friday, and what we're looking at is this peak D on the 4th at 16,631 came straight down to a doji candle. What's important about the doji candle, I discussed it in my overview section. There are certain aspects that I look at. Closing prices either above or below the wick, high or low of yesterday in this case, and that's going to be very important. And what I'd said is that you can anticipate some kind of a bounce, and the bounce should take you to about the 16,320 area. We've actually gone 11 points above that. So having broken slightly higher, that to me so far is a positive, and I'm suspecting that the way the weight of the trading today will have a slightly upward bias. Now, if it accelerates towards the end of the day, you will see at 3:52 this afternoon some kind of acceleration to close right at the highs of the day. So that's what I'm looking at. If, in fact, there's a failure, and at any point today, I think we've had our chance, and they didn't take it. But if there is a slide to negative today, that's under yesterday's close. Of course, I should remember it. I looked at it 1,000 times. So they would close yesterday was 16,256. If there is a close to the downside, that's going to be very negative. So, and the other thing is, in my service, you get in the opening call, you get this quintile right here. You get these 5 sectors. It's the Dow 120-minute chart. Look, it held the 200-period exponential moving average is 16,200. I discussed that. You get the volatility index, which went to a peak C in the 100. That's in the VIX index, and it went to 1620. Now it's pulling back. And what's interesting about this, D could take a while. We could take a while to get to a D. That would be above 1620. The TRIN index is just slightly negative. It's not telling us very much. So let's go back to the market. We've got the S&P, which is up. Let me just double check. Up 4.41 at 1856. You've got the comp index, which is up 23 at 4136. You've got gold. Now this is interesting. Gold is down 320 at 1305. I'm trying to buy a very low-priced gold commodity stock, more as a very inexpensive insurance policy, and I'll explain why. Because there is a chance, just a chance, having gone to leg in the daily chart, having gone to a leg C, possibly a peak C today, holding so nicely that there could be one sudden spike to the upside. I'm talking about it as an insurance policy, and this is a political, let's call it a political insurance policy, okay? Surprises happen, especially when some of your key sectors that have been so strong for so long have literally tanked. And what you want to see is, first of all, is that telling us something? Is the XLF, which has been quite weak, telling us something, having made a peak E in the weekly chart? There could be an alternate count. Right now, everything about it with the MACD fading, stochastic turning down under 80%, everything says it's acting, it's predicting that there will be lower lows and lower highs, and that is a peak E. But what's really important about this is if gold suddenly becomes a harbinger of safety, you will probably see the XLF break, instead of climbing from 2187 up a penny right now into the 22s and making this rectangle formation continue for a while longer. My guess right now is that there's just a chance that 2207 could be touched this week. But I'm not going to take a chance because something's not right here in the financials. And it's saying, just be very careful. And I'm saying, if the financials come down, maybe gold, just for a short period, will become a harbinger of safety. So I'll be back. Bonds are down 9:30 seconds.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I am back and just finishing this off. Okay, there you are. So the Dow's now up 31, S&P's up 3.95. I was talking about the XLF. What's really important about the XLF is that by tomorrow afternoon, certainly by Friday, if it isn't able to push into the 22s and then hold and have a pretty decent counter trend rally, what we've been looking at is that one of the sectors that I would not call it a leading sector, it is certainly an important sector, will be failing. And you do not want to see key sectors starting to fail here. So to summarize just real quickly, all the pieces of the puzzle are in place that the sector rotation could see some kind of a bounce in some of the sectors and the momentum stocks that have had the deepest decline. And at that point, we will see if the bulk of the Dow stocks are starting to pull back. And if that pullback starts to take, anytime the Dow goes under 16,000, well, watch out, because that's going to be a harbinger of even even deeper decline in time and price. Okay, now I had a couple of questions. I'll go through the ones that I can remember in sequence. Facebook, I think Jane the Den wanted to find out about that. I wasn't sure if he was already in it, and if so, if you were in the FB from the bounce from the low that was made at, there was a 58 round number high, but it went to 55.44 as a low 3 days ago, 55.44. That low says, now this is the little V-shaped pattern that I'm expecting from not all the momentum stocks, but the best of the best. Facebook, in this case, has held up better than most. It's only in peak C, leg C, it'll be peak C if there's no new high above 72.59 this month. And I'm anticipating at some point that there will be a leg D up in Facebook, a social media company. FB is a symbol trading at 60.77 up 259. So the question is, if you're not long, what would you do? If you're not long, you've missed the best entry, which would have been either yesterday at the close or this morning at the open. But this is what I'm thinking. It's one of the stocks that fund managers will probably gravitate to as a kind of a counter trend play, which could turn out for them to be a much better play, but I think it's just a counter trend play at this particular point. I'm expecting an H pattern in the weekly, and then it has to come back and retest the 55 level. If it takes that out, then around about 52.50 will be next. But as a play, I would say, yeah, I grab a little bit right now, but only a little bit, because you've lost your best opportunity. So it has to be half of what you wanted. And I would put a stop in. I'd probably put a stop in under today's low, because if it took out the low of to 60.84, well, no, that's where it is. If it took out a low of, 59.19. If it took out 15, I wouldn't put the stop in that at that point. I'd put. You go back to 59.50 and I'd be real nervous. And, yep, thank you, Terry, in the den. Yeah, the Fed comes out with the minutes at 2 p.m. today. I'm not sure in this environment. I think they're going to be so cautious and so neutral in what they say, the market can interpret anyway. So if the market interprets and says, oh, that's good news, and it has a bounce, then Facebook is going to participate. If it's very negative, and by the end of the day, the Dow, instead of being up 27 right now, is down 30 points, S&P's back down to -3, that's very, very poor action. So I'm just saying, I would definitely, if you were wanting to trade it, I'd trade it right now, I'd get in, I'd have a stop of, in fact, I'd have a stop of a point. That's it, makes it so easy. 1 point is, what is that? It's point something percent loss. Make it easy, and the best thing about it is that if it holds anywhere around here by the close today, it could even pull back a little bit Thursday and Friday. It should have a nice move. The candle you're looking at has a high of 63.17, the candle of the third. You want to see it pierce that, take it out, close above it, and then that whole area is 63. That means it will have surpassed the 62.35 9-period moving average in the weekly chart, and that's going to be really good. So can it go higher? I'm saying that if ever there was an opportunity for a decent bounce, this is it. Can the bounce turn into something under these market conditions more than that? I would just go with the stock's action, because it's going to be very independent of many other things. It's one of the best bounces in the momentum stock so far. It's looking good on the day. So that's what I'm saying. Nibble, start a position, get a position. If it pulls back and then it takes out today's high, you could add another little trading position. But I'm saying keep your stops real tight. So that was that one. Then we're going to come back in. We're going to go to Joe in Boston. Joe in Boston. Joe, you want to look at?
J-O-Y.
I'll be right back with Joy Global straight after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back, and we are looking at the very interesting market, trying its best to come back. I think it's going to be more positive than negative by the end of the day. We'll see about that. And I got Joe in Boston online. Joe, okay, how are you doing?
I'm doing well. How are you?
Very well, thank you. So you want to look at Joy Global Inc., symbol is JOY, trading at 60.61, down 15 cents. I've got it in leg D, possibly making a peak D if there's no high above 61.61 today. And weekly chart, I spent a little time on this, and when I did it, I redid it, I think it was about a week ago. I felt that no matter what, this is really leg C in the weekly chart, and it's very interesting because there are a number of charts that have this pattern in the monthly. That is, you can think of it as a sideways rectangle formation, but in fact, all the time, the stochastic and the MACD have been building to the upside. And I had an email overnight to ask XLE, was it XLE? XLE to short the XL, was it the XLE? I couldn't remember now if it was the XL. Oh, I can't remember now. It might not have been the XLE, but it had to do with oil. So I'm just trying to think why yeah, maybe it is the XLE. And I looked at it and I said, maybe you should hold off a tad. So in this particular instance, they're not directly correlated, although they both have oil involved. I think that I'm looking at a chart with the MACD and stochastic that says to me somehow or other Joy Global is involved in the mechanics, right?
They make the big equipment. It's like a smaller Caterpillar. They make a lot of mining equipment.
Okay, good.
Yeah.
I just want to make sure. And as a result, I at first I was a little surprised at the action yesterday when I looked at it this morning when you called, and I updated the notation of the daily. Mm-hmm. And then I said to myself, no, wait a minute. You saw Deere have a tremendous move. It's in a leg F, I think, in the daily. You saw Caterpillar have a very nice move. It's holding near the highs. So there's no reason really why Joy shouldn't be participating. Now, let me ask you, what are you doing?
Nothing yet. I didn't know if this was going to play catch up. And on the monthly, it looks like it's got a pretty decent bottom here.
It looks like it's not a W bottom. It's actually the H pattern the lowercase h, and that H retested at the low of 47.69 back in July of 2012, went to 47.83, just 20 cents above, but it held, and now it's starting to work its way towards the top of the arch formation, towards the 69.19 area. I just say towards it. It doesn't say it's going there. I'm saying that's the direction it's going because it's gone over 50% move.
Now, it looks like the MACD though is turning on the monthly there.
It does, doesn't it? Not only that, if you look at the stochastic has made a little kind of a curve,
right?
But it has bounced. The fast-moving average is back positive, and the fast-moving average is positive. On-balance volume is good. So this is what I'm going to recommend, because I know that you're also capable of looking at price points, and you're prepared to look at them weeks later. It's a more long-term position, as well as I know you can also do shorter term.
Right.
In this case, if you're looking at the weekly, you have to. Here's something I must talk about. Take a moment. I hope my next caller can hold a little bit. I do think it's worth looking at the stocks that are acting well. I want to spend more time on, because they are really bellwethers to the type of rotation and to the type of market that we're in. And because I'm seeing the weekly chart starting to build strength, pushing for the first time up above the 200-period exponential moving average since it broke down back in February, March of 2013. This is very encouraging, because it says that 200-period moving average, first of all, acts as a magnet, then it acts as a repellent, and then it acts as a propellant. And right now it's in the area that says I might struggle a little bit by going a little higher, maybe a little lower, but this is my tightrope. This is what I'm going to hang on to. So here's what I'm going to suggest to you. You use options as well, right?
Right.
So I'm going to make the suggestion. I don't think there's actually a rush to do it right now.
No.
The candle that we're looking at is yesterday's candle, and it's outlined very clearly that 61.61 on the upside and 58.53 on the downside could very well be the predominant trading area for the next 2 weeks if it doesn't push decisively over 62.90, 63.30, that area. If it pushes way into that area, then it's using that 200-period moving average as a springboard. That's really positive. But either way, the way I'm looking at it now, I think there's a consolidation, a high-level consolidation that's taking place, that could take place. So here's my thinking. I would have a little patience, because in the option, a point is not going to make that much difference when you're looking out further.
Yep.
But it makes enough difference in the entry point to give you another bit of leeway if you need to take a little heat on the wrong side. I'm suggesting that anywhere between 60.30 and maybe 59.50. You look at a call position. I would go out into June probably, even though this should occur much quicker than that. And I'd be waiting for leg D to appear. That means C is still not a peak C. It's still active as a C all the way into Friday, a week from Friday, because you need a full week of a lower high bar.
Right.
It also says 57.71 is the 9-period exponential moving average in the weekly chart. That should be a comfort zone. That should be where a cushion, at least for the downside. It's about 3 points. So if you're looking at an option, the option itself, you want a projection to the upside, because there's really no point in buying a call option when you don't actually know what the next level would be. And I'm saying that the area that I'm looking at would be between 62.32 and 63.49 as a potential resistance area in leg D. But once it's in D, you don't know where it's going to stop. But that would be 2.5 points. If you got this down a point or so, that would give you about a 3-point projection to the upside in the call position. At the same time, it says that if it starts to turn the 9-period moving average into support, the whole 60.73 to maybe 60.25 area into support, it could build a base. And the candle I'm looking at as a potential longer-term candle is the candle of the week of the 22nd of February of 2013. That long-legged wick, it's like an evening star, but it really, it's more like a little inverted butterfly right at the bottom. 62.10 was the low, 63.14 was the high. That's the candle that I'd be looking at. Right. So that's the way I'm looking at it if this continues to build nice momentum in the monthly chart. And all I can say to you is if the whole sector starts to move very well, then the very long-legged doji, goes back to the same thing. No, it doesn't. It goes back to the candle of February of 2013, the monthly candle, which has 68.21 to 59.02, and that candle closed at 63.34. So 63, everything's pointing towards the 63 level. If it can build momentum and use the 200-period moving average as support. On the downside, it's real simple. A close below, I'd say close below 59, and it's gone a little deeper into that rectangle formation. 58.68 will still be support. I'm inclined to think of it more on the positive side at this particular point than the negative side. So I agree with you. That's the bias. Hope that helps you.
Good work. Keep up the good work.
Thank you very much, Joe. Hopefully we're correct.
I hope you're feeling better.
Thank you. And spring's coming to us here in Boston. Let's go to Ari in Arcadia, Florida. Hi, Ari. How are you?
I'm doing very well, Basil. I hope you're doing well also.
I am. Very nicely. Thank you.
I sold out 80% of my EWZ.
Okay, let me pull this right across here, folks. We're looking at the iShares MSCI Brazil capped ETF trading at 46.77, down 52. And right here on the chart, I've got great call, Ari. For anyone looking at Tiger TV, it's right there. So you still have some of your position. Now, this is a very interesting one because it's gone vertically up. It's gone peak A, very almost embarrassing to make an A. It went to 45.41, and then it goes to 45.35, just a tad. Can't wait. Next day it moves up higher again, starts leg B, makes peak B at 46.24 on the 2nd of April. Cannot wait, and it zooms up to leg C, and today it's a peak C at 48.77. Everything about this chart says there should be one more spike to the upside to make the D, because the MACD is still very strong, and the stochastics at 88%. It might be a little difficult to do, and I'm talking spike, meaning that I'm not sure it's going to hold because of the verticality of the move in the daily and absolutely in the weekly, and the history of this particular iShare, the Brazil capped ETF, is that it makes a soaring, a rocket ship move to the upside, and then it gives it up. Most of the time, not only gives it up, but it goes to a lower low. My suspicion is at this particular point that there's a tremendous amount of support, but that it could just have a very quick spike, just pennies about 48.77, and then start a longer consolidation. And if it takes out, if this occurs in the next couple of days, then the today's low 46.29 to the 9-period moving average 45.90 area, that's going to be key support. Now, there's a moving average. Anybody can see it. Let me just quickly have a look here. If I want to see if you're able to see it. If you can see it, let me just go to it right now. And then I'll open up the chart bigger. Let's see, it's right there. Okay, so now I've got the voice on, so I don't want to have an echo. Let's get rid of the vocals. That's it. Okay. You can't really see it, so I'm going to open it up. Ari, this chart that I'm looking at right here is the daily chart, and I'm going to say that little red line right, opening it up, is it a little delay there, and it's coming? Yes. That little red line there is suggesting that the upside now is becoming somewhat limited. It's not a sell signal. It just says be a little careful. Upside's a little limited, and that if there was an upside spike, how it pulls back within 2 to 3 sessions after that is going to be really important. So you will still have a little bit left, right?
Yeah, I still have.
Okay. My suggestion is twofold. Well, I shouldn't be giving you suggestions. I should be asking you for suggestions because you've traded this beautifully. But here's what I'm thinking. My thinking normally is that I'd say if it had to start leg D, to raise your stop as tight as you can, and then if you take it out, you've really got the absolute best out of it. But because I don't really have any signals yet, this is my anticipation on what can happen, and the weekly chart, although it's 72%, it isn't at 80%, could in fact hold pretty well if it managed to get to a new recovery high. I'm going to ask you to hold that position. Think about holding it a little longer, and I'll explain why. As a counter trend to the general market, fund managers are going to look at anything that is moving on the positive side. And that gives it a little bit more viability, a little bit of robust buying pressure. So I don't want you to get out of the trade too soon, because I think for you it'll be fun to be in the trade, even if you aren't fully in the trade. But if it goes a little higher and goes above that what did I say, 48.77 level, and starts to make a high level consolidation. Why? It's going to put you in the terrible position of saying, gee, maybe I got out of my major position too soon because it's holding so well. But in fact, what I'm thinking is that we're going to have to go with the history of this, that it does do the spikes and then it pulls back. But this time, if it starts to hold, it'll tell you, and you'll be watching it so closely, it's going to give you a better feeling for if you want to add back a little bit, as the Brazil iShares maybe become a harbinger of safety for those fund managers who are able to go outside the United States, and they're able to buy this, because anything that's moving well is going to find some favorability. You can see what my thinking is here, right?
Yes. I also noticed that nobody talked about it, but now they're starting to talk about it. So it's, I think. Yeah,
I heard that last week as we were going into the highs. I heard a couple of people talking about the EWZ. I don't know if they were talking about it, but it flashed across the scene that I didn't have the volume on it, but I saw EWZ, and I thought to myself, that's interesting. Now they're coming in. Now that it's gone from the 30 level to 30-something level to the 40s. So Ari, I think you're in a great position. I'm just saying you might want to try to hold it longer if it bounces back into the 47.80, 48.80 level. See if it can make a new high. Thanks so much for calling. Congratulations.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman. We are back. Tiger conditions are just checking out, let's see, XLF, BKX, when you did that last night. There was bad news for the banks, mandatory capital, thank you, GT, and let's just see. Capital requirements had the sector, a tizzy actually. The quick question here was to look at, I just wanted to find it here. It was really good. It was the XRE, I believe it was KRE. I think, was it the KRE? Yeah, I think it was the KRE. Anyway, I'm just guessing. I think it was the KRE, and the KRE was, the question was, this is the, oh man, I used to have this notated and now it's not. So that's in the weekly. No, the monthly is A, B, C, D, E, F. F could have recycled, but I'm calling it F for now. In the monthly of the SPDR SB Regional Bank ETF, and the big pop up here is the same as the banks. Got to be real careful. If it's at 40.68 KRE, if it pulls back under 40, On the weekly chart, if it closes under 40, let's call it 39.75, if it closed to be definitive, that's going to be a very big negative. So I'm watching the KOE, the XLF, just to see, can there be a bounce? Because it's very important. Most importantly, in this final segment that we've got right now, it's a good time. I just want to see, I'm trying to find it. I wrote it down. FB, VEU, that's VEU. I had questions in the den. I always like to get to them if I don't answer them in the breaks. Yeah, VEU is the same thing that I was talking about with that it's in peak C. It needs to get, VEU is the Vanguard International FTSE World X USA stock index, and it's at 50.71. It needs to break about 50.96 for leg D. If it does that, that's going to be really important, because if it breaks above into that 51 area, 51.13 was the recent all-time high, or not all-time high, was the recent recovery high. The all-time high was back at 52.29 back in May of 2011. So here's another case where those flat tops, I look at those flat tops as inverted H patterns. So a decisive break needs to be made in this VEU to get into the 52s, and that'll say, whoa, new all-time highs. That's really good. So there's a rotation going on. So let me just quickly do this. I'm going to make it as simple as I can, as I always try. The VIX index has pulled back 38 cents to 14.51. If by this Friday, that's just a day and 2.5 days to go, that volatility index is up into the 1580 to the 1630 area, that will say be really careful, because the next down phase is going to be occurring in the volatility in the market, as the volatility index starts that push to the upside in a very quick U formation. This will be the second U formation. If it fails, if on Friday at 4 o'clock the volatility index is anywhere in the 14s, especially if it slips to the 13s, there's going to be a very strong counter-trend rally, and it'll include those momentum stocks. That's why I was talking about Facebook a moment ago. And it'll include one that we got by just for some of you might have got it by the skin of by a penny or two this morning that we went long. And if you did, just keep everything going with the stops I discussed. It traded there for a split second under the number I said by pennies. It didn't actually show up, but it did trade there. So keep that in mind. Now, one other thing that I want you to talk about is levels. I'll do it on the S&P, because I haven't discussed the S&P yet. The S&P is trading at 1858 in the pattern that Eiffel Tower up and down pattern. It went to a lower low, so that's going to make the 1862 9-period exponential moving average really important. If it can close above that by this afternoon or tomorrow, that's going to be really important for this counter-trend bounce, and it maintains the weekly 9-period moving average support. Stay tuned for Larry Pesavecco. I will be back tomorrow and check.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.